Let's get into the literally the world's the largest public offering in X years. I don't know how many years, but it's been a lot. You and I were on TV multiple times. I think I did CNBC twice. I think you did as well. I did a little segment for Yahoo Finance. By the way, Josh Lipton is has departed Apple and is at Yahoo Finance. He was kind of second sharing with John Fort at CNBC. But listen, um, I'm sure you've read all the news because it's the top news story. But let me break it down for you. It was supposed to, this offering was supposed to come out at 51, and they completely frickin' blew it away, up 24.5% in day one. It was up after hours last night. I think the seminal question is, hey, can they keep this going? Right? I mean, I'm not an equity analyst. I'm an industry analyst, but I do have to weigh in on that. I think the long term prognosis for ARM is really high. Right? Dominant smartphone CPU, dominant consumer electronics CPU, growing in the data center and carrier. You have scale. I mean, 250 billion chips, and scale matters for a couple of reasons. Primarily, the software base. So, it took them 10 years, almost 12, to build this data center stack. And for those watching at home, I think it does take about a decade to do this. Growth opportunities are pretty huge. They might have around 20% of the data center market, but that's really concentrated in networking, storage, networking and storage and security. They have about a 5% share in data center core CPU, and the other 95% is AMD and Intel. I do believe that both Microsoft and Google have some custom chips that are coming out very similar to AWS. Automotive market is huge, right? Going from 1,000 pieces of silicon to 3,000. There's so many. They cover CPU, they cover GPU, they cover sensors. Many people don't know this, but ARM actually have automotive sensors, visual sensors for autonomous driving and safety systems. PCs, Apple, 100% ARM. It's an architecture license, which isn't a lot of money per unit, but they did certainly stir the pot. You've got Qualcomm coming in with Orion, which, by the way, is also a custom piece of silicon. But what about everybody else? I do believe that if Qualcomm is successful in this market, it's going to drag along Samsung, MediaTek, probably a couple other OEMs, maybe even NVIDIA. I wouldn't be surprised if NVIDIA does this. So, and the threats, China threats, no different than any other, big chip tech company. They might be even a little bit more insulated, even though the percentage is high in China at 25%. They're not doing things that get on the radar of the U.S. government, like discrete GPUs. RISC-V, potentially a potentially a bigger threat once we see more designs from big cores from a company like Ventana Micro. But right now, RISC-V is limited to the embedded side, and I would say it's going to take probably another 5 years to build out a full enterprise stack. That's what I got. Congratulations to Renee Haas and the team. Your work has just begun.
Yeah, so this is an exciting moment. The market is dying for something to be exuberant about. And so this is exuberance at its best. 25 times revenue for a company that actually shrunk last year. I would do that with my company all day long. Call me. We can make this happen. But it's kind of like a tale of two cities here. There's a real story of what's going on at ARM, and there's some real positive in there. And then there's this kind of AI story that everybody desperately wants to connect,
Yeah.
And the real connectivity of the AI story is probably more of a evolving than a revolutionary moment, meaning you kind of hit on server, you hit on maybe automotive, you hit on content related to AI. But right now, most of ARM's money is made on selling IP to handset makers that go into smartphones. That's where most of it. And then there's IoT.
Yeah, it's 45% of their business, down from 65% when SoftBank bought them.
And it's an improvement, and it's been improved by the increase in the networking, an increase in server, some automotive content, the PC business. But also, let's remember, PC business sucks, mobile business sucks. Now, having said that, it's kind of nice because we are probably in the later cycle of what will become an upturn in the near future. I do think AI is going to drive a revolution of PCs and formats. We've certainly seen what ARM has accomplished with Apple in the M series. We were both somewhat skeptical that ARM and Apple would get it right. And not only did they get it right, but I think that they've done a really tremendous job of working together to build a platform that people love. And so credit where credit is due. The inclusion of ARM cores inside of, advanced compute, accelerated computing, like the Grace Hopper, is very indicative of the fact that in the most critical AI applications, ARM has designs that can be utilized to move the AI business forward. So these are all things that deserve credit. I think where I probably have the most skepticism is their valuation right? Meaning that this company at $2.5 billion a year of revenue, selling mostly licensing, not so much of this higher margin systems, data center and server yet, really worth like half of what Intel's worth at $2.5 billion revenue versus like 20 times that. Okay. And so that's more my question mark. I think over the course of the next 5 years, I actually really believe they will grow into this valuation. The problem is as industry analysts, I say, good company, buy, good company. I don't actually make buy recommendations, but good company doing important things. As an investor, I'm kind of looking at this going, wow, they have a really long way to go to fit any sort of price earnings valuation. Because remember, they don't make very much money if they make money. They're still like right at that kind of newly making money size of company. Their earnings, they've improved every year, but they're still not highly profitable either. So it's kind of a fundamentals versus vision. On the vision side, I really like the company. Fundamentally, it has some work to go, but this was a great moment. René Haas deserves all the credit because you know what the one thing that the market is the truth, meaning what people spend and what people pay is exactly what the company's worth in a public market. So while I can complain about valuation, right now, if I want to buy it, I'm buying it at 70 billion Val, and good for René, good for the company, good for all the shareholders.